That the demand for housing in the Mumbai metropolitan region has slowed down is a much known and spoken about fact. But how much has demand really slowed down? Well, figures are flying around. ASK Property Investment Report adds up the numbers and gives us some in-depth insight into Greater Mumbai's real estate market. Amit Bhagat, CEO and MD of ASK Property, joins me now for the truth behind Mumbai's residential markets. Mr. Bhagat, thank you very much for joining me. You know, I'm going to start with those frightening numbers which appeared all of last year and some even the beginning of this year. Numbers like 48 months of inventory overhang in MMR. What are really the inventory overhang figures looking like now that you've added up through all the new sources? How much have sales slowed down?
Thank you, Manisha, for this opportunity. Let us give our perspective based on research done by us on three main parameters. One is the job creation based on space absorption. Second is based on absorption as per registration data. And third is the affordability based on prices. If you look at our data, we are seeing an inventory overhang of 26 to 31 months in various micro markets, based on the new launches, existing inventory and the absorption. So if you look at the launches in 2013 and 14, you will notice that there has been a decline of 14% in the launches because of delay in approvals. But this 26 to 31 month inventory in various micro markets of MMR region and the unaffordability because of very fast increase in prices, because price increase in the last 5 years has been 20 to 30%, not compounded, but 20 to 30% yearly rise, whereas incomes have grown at the rate of 10% only. And that has led to the mismatch in the affordability, and that is leading to slow absorption.
Okay. New launches, as per your report, have also dropped in 2013-14 over the previous year, and we can see very few launches this year as well. So, sum up these two factors for us. Will unsold supply force developers to bring down prices, or do you think that they will flow through or hold on to the prices even in the rough times?
See, it is a function of how economy behaves in the near future. In 14 and 15 also launches will drop because approvals have not been expedited because also of the change in government. Once the government is in place, and if government is able to expedite approvals and launches are more than previous years, it will definitely have an impact in prices, and it will have a downward impact on prices. But if the approval process abstains from developers from launching new project, the developer may sail through, and there is already a time correction happening, because if you look at last 2 years, prices have not gone up, and there are schemes, attractive schemes being offered by developers, no EMI till possession, which itself is a time correction. And our report also suggests, based on the current launches and the same amount of launches in the next 2 years, there will be no price increase which can be expected by a developer for next 18 months. But if launches are more, it can have a downward impact on prices.
You know, Mumbaikars have been crying hoarse over how unaffordable property has become in the Mumbai region. Your report also supports that, doesn't it?
Yeah, because in the last 6 years, 20 to 30% has been the increase in prices based on particular micro market in MMR region, whereas incomes have only been growing at 10%, because after the global downturn, we have not seen the best time for the Indian economy. Now with a stable government in place, if economic policies are in favor of a growth, and financial services industry is already, especially the stock market, has been witnessing a boom, and if it is supported in other industry to other industry also, you will see a job creation and income growth. Otherwise, affordability will remain a key factor, especially for Mumbai, because what is mid-segment in Mumbai is actually luxury in other cities. So 10 to 12,000, which is perceived as a mid-segment housing in Mumbai, is actually luxury in markets for Bangalore, Chennai, Pune and Noida and Gurgaon.
There have to be some markets in the MMR or entire region which are looking stable and good for future investment, Amit. Purely from an investment point of view, which would those be?
At the current prices, investment in real estate may not yield the desired returns, and that is why only end users are left in the market and investors have withdrawn. But certain growth corridors like say Wadala, Chembur, Navi Mumbai, Andheri, because of the infrastructure projects being announced, may have an impact on the prices in future. So wherever you have an infrastructure project being announced, you will see interest of the investor and the buyers as well. Investors have withdrawn from other markets where infrastructure is also not of the desired pace.
Okay, now from a private equity guy, the big question, why are real estate markets still looking so subdued? Stock markets are roaring ahead, but none of that feel-good factor seems to be spilling over to real estate.
One is the inefficiency of the approving authority. Inefficiencies of developer are currently all built in the current pricing. Second is, stock markets will always be ahead of the economic indicators. And stock market is, with a lag, real estate catches up. The lag is more currently because it is going to be more than what it was used to be in the past, purely because of the inefficiencies of the regulator, approving authority, and the inefficiency of the developer is also built in, which is delaying the recovery of the sector. Secondly, unaffordability, because the last 6 years of not so buoyant economy has been inbuilt in the expectation of the end customer and the investor. And so we will see a lag of two years approximately when the investor sentiment again in real estate will be revived.
Amit Bhagat, thank you very much for joining us today.
Thank you.